Good morning, traders. Welcome to the TMT Stock Market Strategy video for Thursday, July 28th. Really, there has been no change for the last couple of days. Actually, we haven't gone anywhere the last 10 trading days. Pretty much most of July has been a consolidation phase, other than the 4 or 5 days in the beginning of the month where we kind of gapped up pretty much every day after the Brexit vote. But I want to put out the video. I wanted to put this out for you just to show you what we're looking at and getting ready for a buy trigger in the VIX, and of course that means a sell trigger for the markets. The markets are in this euphoria of buying at these all-time highs, where me personally, I'm looking for high probability setups, and something like buying at the top tick in the market is really not my flavor and shouldn't be for you as well, because a lot of professionals are not going to be buying the markets here. They're going to be waiting for at least a decent pullback. I'll show you where I think the markets may go. And I mean a pullback. I'm not talking about the correction that I've been mentioning. That will happen, I do believe, between now and October. There's a lot of cracks that I've been seeing. Now, my trading model for TMT is still neutral. So when you have a neutral state, what do? We wait patiently for higher probability trade setups. We don't want to just go blindly, go out and short the market or buy the market at these areas. But let's get right into it. It'll be a short video, but I definitely want to show you what I'm seeing. We're getting very close to a buy signal in the VIX. Here is price channels, and it's not the Bollinger Band that I like to use, but I also like to see where the price channels are, because you usually get some sort of a bounce. You could see that here. You could see that here and here as well. But right now, we are continually moving lower, and we have extreme complacency to the buy side. We do have positive divergence building here, as you can see in the RSI, our MACD, and our slow stochastics. I'd like to see one big push and get a curl break back up. That'll give us a MACD buy signal, and all three of them will be on a buy signal as the market is just hindering at these lows here. Okay, here is the VIX as well with the Bollinger Band. You can see down here the Bollinger Band finally picked his head up and is now pinching. So this area here needs to be watched closely. You can see again, here's the positive divergence here in the MACD, RSI, and of course stochastics. But you see, we're just starting to pinch here. That means energy is building down here, guys. So I would not be looking to chase longs in this area. I would be waiting patiently for either a breakdown on the VIX that'll give you a last final pop in equities. Everybody gets long, all of the retail crowd gets long, and then a market goes to revert back to the downside. Now, we had FOMC minutes that came out, the rate decision, excuse me, and there was no raise in interest rates. They were more hawkish than the last time. Gold rallied, and also the market rallied, and bonds rallied. Well, guess what? You're not going to have all three of these asset classes rally at the same time. Somebody's wrong, and I do believe it's going to be equities at one point in time. All right, let's just take a look at the VXX. You can see here just about all-time lows here in this VXX. And we do not have positive divergence in the VXX as of yet. We're getting close, but you know, VXX obviously mimics the VIX. So energy is building here, guys. Be very, very careful. I'm looking for a decent pop in this VXX somewhere at least to the 50-day moving average, which at any given moment, you get 2 or 3 days, a big rip up like that, you're going to get a big move. And the volatility right now, it's so quiet, it's actually scary. Spiders. You could see here we rallied, and then we came back down again. Again, sideways for about 10 trading days. We haven't gone anywhere. We're going to need to take this area out at 217.20 or the low at 215.50. 215.50 and then 215 ultimately would get us down to about 211. Which would be the 50-day moving average and its horizontal support, which was resistance. All right, 60-minute, just want to show you that we do have negative divergence in the 60-minute chart. So use caution here, guys. All right, and then I want to show you the transports. Transports here not doing well at all. Broke back down again. We did take that swing high out, but look what's happening here. Lower lows, lower highs. You see, I repeat myself here, but I want to show you that transports, our leader, is not leading, okay? Russell, same thing. Russell now is starting to pinch. Yes, it is constructive that we are above the support area and basing above support area. We do have a nice little doji. As you know, dojis or doesn't mean anything unless you break the high or the low of that candle. So let's see what happens for tomorrow's trade. All right. And then lastly is the Qs. Facebook came out with some good earnings. So if the Qs are doing well, Amgen, which heavily weighted in the biotech sector, is the Qs. Should do well and should start to push up even higher yet again. But again, guys, very, very stretched here in the short term. I would use extreme caution. I'd be looking for signs of pullbacks and be ready to short either your best stock or your best index, at least for a pullback, okay? And then, of course, we would reevaluate it. All right, guys, have a great day. Hope you're doing well, and I'll see you tomorrow. Take care.